Bueno, pues vamos ya con esta cuarta sesión, este cuarto día de esta edición, sexta edición de BIOS. Sabéis que inicialmente en el programa no estaba, íbamos a hacer 3, pero los mercados cambian y hemos tenido que hacer algunos ajustes sobre la agenda inicial, así que vamos a ir con este cuarto día en el que vamos a tener una sesión muy interesante, porque muchos os estáis preguntando qué hacer con las carteras más conservadoras, con las posiciones más defensivas, y este momento es ideal para conocer cómo lo está haciendo uno de los gestores de referencia, uno de los fondos de referencia para esa parte más conservadora, como digo, de las carteras. También por esos ajustes que hemos tenido que hacer, hoy no voy a tener a selectores aquí conmigo en el plató de Finect, las preguntas las haré yo, así que echaremos de menos a nuestros selectores, pero seguro será también interesante. Yo creo que las preguntas que tenemos preparadas también son interesantes para conocer esa visión de mercado de Elixir Sinra. Bueno, si estáis listos, vamos a ir primero con un pequeño vídeo para conocer mejor a nuestro siguiente invitado.
Viajamos ahora hasta París para cerrar esta segunda jornada de BIOS 6 con Eliezer Ben Simra. La flexibilidad es clave en su estrategia de gestión y más todavía en estos mercados tan especiales que se enfrentan al cambio de paso de los bancos centrales. Un reto enorme, sin duda, como lo fue terminar el año pasado su primer triatlón, en el que se estrenó tras correr varios mediomaratones. Eliezer, gracias por participar en BIOS 6.
Eliezer, tiempo para ti.
Thank you very much. Muchas gracias. So I'm Eliezer Benzimra and I'm here to present Carmignac Portfolio Flexible Bond. So on the second slide of the presentation, we describe in a few words what is Carmignac Portfolio Flexible Bond. This is a global flexible fixed income fund which has as an objective to outperform fixed income markets and to deliver positive returns whatever market conditions over the investment horizons over 3 years. In order to do this, we are two co-managers on this fund, Guillaume Rijad and myself, and we've been working together for the past 9 years. And at Carmignac for the past 3 years now. The fund is around 1.5 billion euro, and its reference indicator is the ICE Bank of America Euro Broad Market Index. The fund relies on 3 performance drivers. The first one is the asset allocation, which is the widest and the most diversified possible in order to capture opportunities on fixed income markets at any time of the economic cycle. The second one is a dynamic management of the modified duration with ranges that are wide between -3 and +8 in order to have the best expression and to have the optimal exposure to interest rates. And the last pillar is the fact that in this fund, Guillaume and myself, we are in charge of the asset allocation and management of modified duration, and the bond picking is delegated to our experts in-house on EM markets, on financial debt, or on credit in general, in order to bring also added value on the bottom-up side and on the top-down side. On the fourth slide of the presentation, we express also briefly our investment process. As I said, there are three pillars: asset allocation, dynamic management of modified duration, and bond picking. And on this, we have different types of committees: macroeconomic committee, fixed income market committee, and implementation committee, in order to go from the most general to the most particular and impact on fixed income market and impact on the choice of instruments that we'll use in order to express our convictions. And on the bottom-up side, we have also a lot of different models brought by our experts on the credit side, on subordinated financial debt, on financial debt in general, and on EM markets. Now let's have a look at on the fifth slide of the presentation about our performance contribution in 2021 and in 2022. in those 2 years, markets have been negative, fixed income markets have been in negative territory. In 2021, we succeeded in being positive territory thanks to our diversification on corporate debt, thanks to our diversification on, for example, inflation-linked strategies. But on 2022, since the beginning of the year, we have been largely hit by our exposure on Russia and Ukraine after the invasion of Ukraine by Russia, and by the fact that our corporate exposure on the Russian debt, especially, has been brought to 27 cents out of a dollar. So I think we'll speak about it later, but what is really important now, I think, is to, after having been hit on this exposure, on Russian exposure and Ukrainian exposure, I think that we have to draw conclusions about what will be the impact on economics, on macroeconomics in Europe and in the US, but also on fixed income markets in general, and the reaction by central banks due to this shock. Maybe now, if we go to the slide 7 of the presentation, we can say that the first impact of this war between from Russia to Ukraine is an inflationary shock. For sure, commodity prices have been rising for the past 2 years, but this exogenous shock will have a lasting impact on commodity prices, on oil, nickel, wheat, and iron ore, as Russia and Ukraine are the biggest exporters of these commodities. So the direct impact will be a rise in inflation expectations, both in Europe and in the US. On the next slide, we can see that this shock, so this exogenous shock, have also an impact on markets in general. European equities have been the most hit since the invasion on February 24th, and credit spreads have been widening sharply also, in order to reflect the probability of a recession or of an inflationary shock. And on the next slide, we have decided to, I will say, illustrate or to put some figures on two scenarios that for us are plausible on the impact of the Russian invasion of Ukraine. The first one, I will say, the first scenario is a mild scenario, with oil going to 140, with food prices up 25%. And in this scenario, the first conclusion is that first, Europe will be more hit than the US, and on two fronts. First, on growth. As you can see, the shock to growth will be twice as important in the euro area rather than in the US. And on the inflation front, also we'll have a shock of the same magnitude in Europe and in the US, where inflation was already high before the invasion. So the figures that you are seeing here are the shock to on the CPI, or on the core CPI, so on consumer prices, And on the second scenario, which is a harder one, we have so analyzed if oil will go to 175 and food prices went up to 40%, by 40%, with a Russian embargo. In this scenario, in the euro area, will be close to a recession, because our first assumptions were of a growth around 3.5, and you can see that with a negative shock of 3.1%, will be for sure below potential and close to recession, to recessive figures in Europe. And what we can see also is that the US will stay rather quite immune to the shock on the growth side, but on the inflation side, both regions will be hit. On the next slide, we are analyzing also the sanctions and the sanction and also the EU response. For us, the EU response, the fact that EU will want, as the example, for example, of Germany to increase the spendings on defense, for example, and on energy, to accelerate the green transition and managing the migration situation, will have also an impact on fiscal policy, and states will have to spend more in order to manage this shock. So now, after having drawn, I will say, the economic impact, the impact on inflation and on fiscal, it's important to look at the impact in terms of monetary policy, how central banks will deal with this shock. And the first answer starts on the next slide with the fact that for us, the ECB, so the European Central Bank and the Federal Reserve, will continue to tighten. Why? Because, as we said, the impact on inflation is more important than the impact on growth. Growth was already high and was strong, and stronger in the US than in Europe. But the main problem of central banks today that they have to deal with is inflation. And so we think that the Federal Reserve will hike rates maybe by 6 or 7 times in 2022. European Central Bank will also hike rates, and so it's still a negative environment on the front-end part of the different yield curves. On the second slide, we can see also the contribution to inflation, and to see that in the US especially, inflation is not only a short-term issue, but more a long-lasting issue, as wages are growing and are rising quite fast. And so the Fed maybe is afraid of a sticky inflation scenario, and that's why we'll do whatever it takes in order to bring inflation down. So that's why, in terms of positioning, we recommend being short, so negative duration, both in Europe and in the US on the front-end part of the different yield curves. But also, the fact that we express that inflation will stay sticky and growth will remain, I will say, except if we take the hardest scenario on quite, I will say, reasonable levels. Even long-term rates have room to go a bit higher, because after hiking rates, we'll start to see also central banks trying to decrease their balance sheet, and so it will have a negative impact on long-term rates. On the next slide, the other conclusion that we are making from this shock is that inflation expectations will remain high. Why? Because, as I said, commodity prices will continue to go higher, as the crisis is not over yet, and inflation expectations was high, as I said before the invasion, and the premium, the uncertainty on inflation will remain high. That's why we are still favoring inflation expectations in the portfolio via swaps, for example, in order to express this kind of conviction. On the next slide, we have decided to conclude by showing the main performance drivers of the fund as we stand right now, and the main tools in terms of risk management that we are putting in the portfolio. So I've been stressing that there are some risk higher interest rates in Europe and in the US, but at the same time, there are big opportunities on markets, especially on three main themes. The first one is emerging debt. So we have an exposure of 16% on emerging debt in the hard currency, with, as you can see, a yield to maturity of close to 10%, with sometimes some states or some corporates that are very far from the conflict in Ukraine, and that in fact benefiting from the crisis. Why? Because they are net exporters of commodities. The second theme where we are still positive is also on some corporate, high yield corporate with 14% exposure with a yield to maturity of 7% that are directly linked, I will say, to the energy sector, and they will be also one of the main beneficiaries of this new macroeconomic landscape. And in the end, we have 14% of subordinated financial debt with a yield to maturity of 5.4%. And as we can see in this crisis, European banks had some exposure, but not big ones to Russia in especially, and the first stress test have shown that they will all remain solvent in face of this crisis. And so even if we expect that rates will be higher in Europe, we still think that with this yield to maturity, we have enough cushion to absorb shocks, and that's why the risk reward is quite favorable. And in terms of risk management, so as I said, duration remains very low, especially on core assets. German and US rates, we are negative on those assets. We still hold a high level of protection via CDS, especially on credit markets, as we think that markets maybe have not completely integrated the magnitude of the economic shock on Russian and on European assets, especially. We have also 12% of cash and money markets that are here to be deployed in case of wider spreads and bigger opportunities. And as I mentioned, 10% of inflation-linked bonds in the portfolio, and inflation break-evens, so inflation expectations that we expressed in the portfolio via swaps, both in Europe and in the US, confirming and reinforcing, I would say, this view that inflation will remain high for long in those two regions. So now I'm at your disposal for any question if you have some.
Muy bien, muchísimas gracias, Eliezer, por tu exposición, la verdad, muy interesante con todo esto que estamos viendo, cómo estáis gestionando la cartera. Vamos con preguntas que tengo listas aquí para ti. La primera tiene que ver con el oro, ¿no? Pues el oro es un activo defensivo, está moviendo en este entorno de los $2.000. No sé si piensas que ante estas perspectivas de inflación puede tener recorrido todavía, y desde el punto de vista de las compañías, ¿no? De las compañías relacionadas con el oro, que también suelen amplificar los movimientos tanto al alza como a la baja.
Yes, for sure, gold has been a safe haven asset in this crisis, and we think that it will remain a safe haven asset during the year for two reasons. The first one is, as I mentioned, we think that inflation will remain high and real rates will remain very low. And gold, the correlation of gold with real rates is very high, and so we think that gold prices have more room to go higher. And the second reason is also due to the sanctions taken by Europeans on Russia, with the freeze of the assets of the central banks, and maybe it will give some idea to some central banks to exit a bit their holdings in euro and or in dollars, and to buy some gold to put their reserves on. So yes, in this scenario, we think that gold prices can go higher.
Vamos con la segunda pregunta. Estamos viendo, bueno, pues sanciones que han impedido también que los inversores internacionales puedan vender sus posiciones en Rusia. Mucha confusión en este tema. ¿Tú crees que una vez que se solucione el conflicto podrá haber de nuevo movimiento y podrán volver a funcionar estos activos bloqueados ahora mismo, tanto los bonos como las acciones? ¿O piensas que está ya totalmente perdido?
No, we think that those assets can recover, and that's why in the portfolio we have not sold our assets, Russian assets. We have 1.8% as we speak of Russian assets, especially corporate ones. And the latest announcement has been that Russian companies have been reimbursing their creditors, whether it is in euro or in dollar. And so for the moment we are, I will say, at the climax of the crisis. So that's why and a lot of investors have been forced to sell their Russian exposures. That's why we have seen this huge discount on Russia, and especially. But we think that maybe if we get some negotiation between Russia and Ukraine, it will be part of the negotiation. The fact that Europeans and Western countries lift their sanctions against Russia. We think that it will take some time for sure, but there is some recovery value embedded on those bonds. Yes, for sure.
Me ha parecido entender, Eliezer, que habías dado un toque más defensivo a la cartera, ¿no? Con coberturas y demás. ¿Qué te llevaría a empezar a aumentar el riesgo en la cartera? ¿Qué te llevaría a reducir esas estrategias de cobertura que has implementado?
We are thinking a lot about this. For the moment, there are two main issues. The first one has been Russia and Ukraine, putting a lot of volatility on the markets, and the second one has been the tightening of financial conditions by central banks. We think that as soon as we can see some appeasement on one of these two situations, but especially I will say if we start to see a decline in volatility, for example on the VIX, it will be one indication to reduce some of these edges. And maybe the second way will be at a point, you know, that these protections are reflecting also a probability of default of corporates. And if at a point we think that the probability of default is too high compared to our assumptions, in this case, we will also reduce our hedges.
Y la última pregunta, estamos viendo, conocimos hace poco en la última reunión del BCE, que está, vamos, el plan de retirada de estímulos incluso ha ido más fuerte o más rápido de lo que se esperaba desde el punto de vista de la reducción de compras. No sé este punto qué efecto puede tener en los tipos de interés y en particular también en los países periféricos.
Yes, we think that I think this meeting was really important because Christine Lagarde of the ECB really expressed the fact that the ECB will do whatever it takes to curb inflation. And so, meaning higher rates, as I said, higher short-term interest rates, the fact that the ECB will hike rates in 2022 and in 2023, but it has been also an indication that the ECB considers that spreads, so the spreads of peripheral countries or so-called peripheral countries, do not need to be supported in this environment. And that's why we are now negative, for example, on Italy, because we think that without the ECB support, we can see a widening of spreads as we speak. For example, the spread between 10-year BTP, so 10-year Italian bond, and 10-year German bond stands at 160 basis points. We think that without a complete support of the ECB, this spread can go to 200, for example. That's why that is why, in order also to express a negative view on interest rates in Europe, we diversify by being both short 10-year German rate, but also short 10-year Italian BTP.
Ok, muchísimas gracias, Eliezer. Pues ha sido un placer, ha sido un gusto tenerte con nosotros y conocer de primera mano, ¿no? Como un equipo de gestión como el vuestro está viviendo estos momentos y está tomando esas decisiones en cartera. Muchísimas gracias, Eliezer.
Muchas gracias.
Gracias a todos por haber estado. Ya habéis visto esta manera de acabar este BIOS 6. Podéis encontrar toda la información, todas las ponencias, toda la documentación en el grupo de BIOS en Finect. Ahí podéis encontrar también las fichas de los fondos, el acceso al link, o sea, toda la información. También los que sois asesores, sabéis que podéis acceder a los links para las horas de recertificación. Nada más, ha sido un placer contar con vuestra audiencia una vez más en nuestros eventos BIOS. Nos vemos ya en el próximo BIOS, en BIOS 7.